Okay, guys, so in this video, we're going to talk about Albertsons Company's ticker symbol ACI. So this company recently IPO'd last week, and it's actually the second largest grocery store chain in North America, number one being Kroger. So I took the time to kind of take a look at this IPO and see if there's any value into buying it. So before I get into this video, guys, please smash the like button. It really helps. So let's get right into it. Albertsons Company is one of the largest in food and drug retailers in the United States, and they control a big brand of companies. So me personally, I'm most familiar with their Safeway brand. I used to shop there a lot. When I was growing up in the States. So as you can see here, we have Acme, Albertsons, Amigos, Andricos, Cars, Hagen, Jewel, Osco, Lucky, Market Street, Pavilions, Plated, Randall's. Actually, Safeway. Safeway was a pretty big brand when I being in Washington, D.C. They have a pretty big footprint there. Shaw's, Star, Tom Thumb, United Express, United Markets, and Vons. So as you can see here, supermarket stocks have done really, really well this year due to people stockpiling goods. So companies like Walmart, Amazon, who owns Whole Foods, and Kroger have seen a massive explosion in sales. So let's get right to kind of those numbers that we want to take a look at how Albertson has been performing. Okay, so if we take a look at their numbers, I got this from Yahoo Finance. It says net sales for 2019 were 6.2 billion. So the companies did on their last fiscal year, they did around 62 billion in sales, and they've seen lots of positive sales growth. And of course, due to this whole pandemic situation, they said that same store sales were up 47% during the when the pandemic kind of started, and things were really taking off because people were stockpiling groceries and toiletries, essentials like that. So people really standing in line and heading to the grocery store. So let's kind of go a little bit more in depth into what's going on in this IPO in general. So if we head over here to Market Watch. Okay, so I'm at Market Watch. As you can see here, it says Albertsons is giving the public markets another try. Here are 5 things to know about the grocery store giant and IPO. So the company IPO'd at around $16 per share, and they actually sold it around 50 million shares to kind of additional, raising up to 800 million in cash that they can use. And as you can see here, basically the company, give you a quick background on the company. They opened their first store in Boise, Idaho in 1939. They merged with Safeway in 2015, and they own around 2,252 stores around 34 states, and they're around first or second in their market, and around in 68% of the places that they operate. So this is a very strong chain of grocery stores. And this seems like a perfect time for them to go public, seeing that grocery stores have seen such a huge boost in revenue. So they had a couple of potential deals. They actually tried to discuss a merger with Rite Aid, but that actually fell through. And so the good thing about this company is that I think it is pretty undervalued. Actually, I'm going to go a little bit more into that recently, but you can also see that the company agreed to sell 1.75 in convertible preferred stock to Apollo Global Management, and they also sold some convertible preferred stock to ACI real estate companies. So this is obviously a good sign, seen as that these companies uh, obviously are buying it because they see there's some value in Albertsons, and with kind of the whole boost in spending, and a lot of people are saving more and cutting out non-essential spending, basically discretionary spending. I guess people are figuring this is the perfect time to go public with this company, that people have changed their spending habits a lot. And the company will also pay a quarterly dividend, so they'll be paying around 2.5% yield of the IPO price. So the IPO price was $16. So just to do a quick calculation. Okay, so just to do a quick calculation, 2% of $16, that would put the dividend at around 40 cents. So, 40-cent dividend so far, annual dividend, that would be about approximately, I guess, around a 10-cent dividend per share per quarter, so not too shabby. Obviously, much better than any yield you're going to earn with a high growth stock like per se, like say something like Visa, or even much higher than you're going to get at the bank. So nice to see a nice dividend there. And obviously, this convertible stock could, in fact, the stock price, you know, assuming that obviously they convert these into shares, but probably we'll see what happens. But a lot of these companies end up getting these convertible preferred stock deals to get a lot of return on their investment. So here's a couple of the key takeaways from the IPO. The company does have a lot of debt, so around 8.2 billion in outstanding debt. But one of the things I think people are seeing that the company is in a bullish trend, seeing that the revenue and same-store sales have skyrocketed. So hopefully they're going to take in a lot of cash flow this year due to the whole pandemic and be able to pay down some of that debt. And then let's talk a little bit about the ownership. So Sybaris, that's a really, really big capital management firm. They own around 31% of the stock. Kimco owns 8%, and then the rest of the sponsors around 11% each. So that's a good sign. The fact that Sybaris owns such a high percentage of the stock, I think that's a pretty big vote of confidence. And then as we can see here, they're going to be doing a lot of online grocery shopping and things like that. So Walmart and Amazon especially has kind of revolutionized the industry with their whole grocery delivery service through Whole Foods. So that's going to be a new category of growth for this company. And they're also offering curbside pickup abilities around 650 locations. And then the company has a lot of private label brands that do over $1 billion a year. So basically, this company is basically a pure play on, the changes, the short-term changes, at least in consumer spending in the United States. And I think it is undervalued. So let me tell you exactly why I think it's undervalued. So let's currently take a look at the current stock price. It's around $15 to $16, so it's basically at IPO price. So in order to kind of figure out where this valuation was, I'm basically going to take a look at Kroger, which is the largest grocery business in the United States, and kind of extrapolate a valuation from there. In order to kind of get this valuation, I'm going to be using some data from Yahoo Finance. So you can find all this data at finance.yahoo.com. And I'm going to be using a term called a price to sales ratio. So I'm at Kroger right now. So Kroger is the largest chain and Albertsons is the second largest. So what I'm going to do is I'm going to see exactly what the market valuing Kroger at, and then see if we can use that same value to kind of figure out a true target price for Albertsons Group. So if we can take a look right here, you can see I'm looking at a ratio called price to sales ratio. So price to sales ratio is the stock price over the revenue per share of a company. So you can see here the number is 0.21. So all we have to do to calculate this, you can calculate this really easily in Yahoo Finance. You just simply take here's the revenue, and then you just divide it by the shares outstanding, and that gives you the revenue per share. So then in order to calculate the price to sales ratio, you just take the price of the stock, which is $33, and then you divide it by $159. So let's do the same thing for Albertsons Group, and we can get some very interesting numbers. So I can show you guys if this stock is undervalued. So again, I'm going to bust out my trusty calculator because Yahoo Finance has not done the numbers for us in this time. Okay, so I hope you can see this. So if you can quickly remember, I'll just go back here really quickly. Remember the price to sales ratio for Kroger is currently 0.21. And right here, I want to calculate the same number for Albertsons company. So, okay, so this has already done it for us on Yahoo Finance. So we already have the revenue per share. That's the number that we need to do this calculation. So I pull up the calculator. So the current share price is $15.77. So I'm going to do $15.77. And then I'm going to divide it by the current revenue per share, which is 223.37, and then give us an equation. So the number we have here, I guess we can just round this off. It's basically around 0.07. So let's say around 0.07. Let's just kind of round this number off. So we have 0.07, and then the P. So this is the PE. This is the price to sales ratio. 0.07, and then the price to sales ratio for Kroger was 0.21. So according to this number, it looks like that the stock is currently at a 66% discount. So assuming that the price to sales ratio of Albertsons will eventually match the same one as Kroger, that means that this stock is on sale. So if it's at a 66% discount, then all I would do to get the kind of a, I'd say, a fair market price for this IPO would be to just multiply it by 3. So we're looking at kind of a price of around $47, and the stock is currently trading at $15. So I think it's at a pretty nice discount. So guys, that's about to wrap things up. What I think about Albertsons Group, I think the stock is obviously undervalued. I think that they kind of rushed to get this IPO out, and I think that the fact that a lot of these institutional investment firms are buying up those convertible preferred shares, and the fact that Sybris is holding 31%, obviously they feel that the stock is undervalued. Otherwise, they would be dumping their shares. So I think $45 is a realistic target price. So I think you're getting this stock at a pretty nice discount. So I think it's a very strong buy. And the good thing about this is we know that this is a recession-proof business. People are always going to go to the grocery store. So I hope you enjoyed this video, guys. I want to wrap this thing up. Please smash that red subscribe button if you enjoy my content. I'll be posting more videos on hot new IPOs that are coming out this year. We know that IPOs have basically been crushing it as of late, and a lot of these stocks, basically within the next 6 to 12 months, a lot of them have been up 200, 300, even 500%. Just take a look at some of the recent IPOs we've had, like Zoom and FSLY. So that's it for now, guys. I hope you enjoyed this video. Until next time, take care.